Hey everybody, welcome to the Spartan 101 webinar for July 24th, 2020. Today guys, we're going to be talking about low float stocks. So, reason buy is they've been hot, really hot lately. A lot of traders in the market, more traders than usual just because unemployment rates obviously high. People have a lot of money in savings, and what is there to do other than trade? You know, there's not really any sports to bet on or anything like that. That's going to change shortly, but you know, there's a lot more traders trading these smaller cap stocks, so there's a ton of opportunity on both sides of the trades, upside, downside. So I want to talk about that today. If you guys are new to the webinars, this is the first one you've watched or the first recording that you're watching currently right now, what you have to do is stop this one and go back to one of the beginning webinars. In those beginning webinars, all the way to the right, in like 2018, in those webinars I always go over my risk reward and my technical system right at the beginning of those webinars. So I talk about the time frames I use, the EMAs I use on each time frame, how all these things work together. I talk about support resistance, how I actually chart that out, and then basically how all these time frames correlate together with that risk reward, which is super important to understanding these other concepts. Every concept I talk about builds off of those technicals. So go back, watch that, get a good understanding of how those technicals work, throw them on your charts, practice using them, and then you can go through the webinars pretty much in any order. There is an order that I do recommend you go through, and this is the webinar order. It is foundations of the Spartan technical system, so what I just kind of talked to you guys about. Raw technicals, chart patterns, trading the open/pre-market, scanning, and then go through behavior psychology routine, and then there's 40 or 50 more topics. You can go through those in any order. You want to get a really good understanding of the base knowledge of things. If you guys are brand new to trading as well, this does build you up from knowing nothing to knowing a lot. So definitely go into it. Things get more complex as you go through, especially if you start diving into the options side of things. Then obviously it's a little bit more complex than equity, but all the information's there. So anyways, low floats, that's what I want to talk about today. I'm going to show you an example from today too. I'm glad we had a runner. Actually, I might have to blow it up. We'll see. I'll see if I can get it up in a second here. Because I did short it a couple times, over and above what I screenshotted. Anyways, low float stocks. Let's dive in. So, how do these low float stocks work? What is a low float, by the way, guys? A low float is a stock with a float, the shares that are available to the public to be traded. That amount of supply is low. So the way that these things work is if there's a low amount of supply, there's a high amount of demand. What happens is price goes up fairly quickly because everyone wants to get their hands on the supply, and everyone's going to be selling at a little bit higher, as more demand comes in. So it's the law of supply and demand, which is what causes these things to have so much momentum, so much volatility. Important to understand that. And the reason why it's important to understand that is if you're a long trader, you want to get in when there's momentum. If you're a short trader, you want to get in when that momentum's dying down on the buy side. We need to understand these two concepts. Super important. So we'll talk about that. What I consider a low float is any stock that is under 30 million. The ones that are under 10 million are typically the momentum runners, but you do get some runners that have a little bit bigger floats, like ABUS, which was a 49 million float, which is still small. By no means is it a mid cap or big cap, but typically you'll see the ones that are under 30 million will be the runners. So we'll talk about some examples, but if you guys remember like IMRN, you remember UONE, these types of names that absolutely skyrocket to the upside. These are smaller float names. Obviously it's $6 to $25. UONE, if ever you guys remember this one, I'm sure. I can't even go back that far, I don't think. I'll just look at it on the daily, but it went from like $1 to 54. So these are the low float names. So we'll talk about that. These companies, low float companies, are usually cheap, right? They're probably for the most part under $10. I would say 90% of them are. Some are between 20 and 10. You see a bunch of those, usually biotech companies. But these companies, like I said, usually not great companies, meaning that they usually are not producing any profits. I don't really think I can't really think of one that's, generally producing any profits. I think there's maybe like a couple examples. I think, honestly, I can't think of one off the top of my head. But generally speaking, these names are always losing money net year over year. So if you look at their, something like IMRN, you'll see that, okay, you can't even see it there, UOME, most likely, no. Well, their income is blank here, so they're obviously losing money, but I want to show you one as an example that's losing money. UAVS, okay, negative 2 million a year. There's one right there. What did we play today? We played Mist, negative 61 million a year. What's another one that I played? I think it was YEKY or something like that at the end of the day. I can't remember. Shorted it. Asna wasn't a low float, but small cap. Still losing money. So basically, most of these names, guys, are cheap for a reason, because they lose money. That's why they're cheap. And they're usually the types of names that will sell off. They'll do a lot of offerings, because that's the only way that these guys can raise capital to stay afloat. And then they'll eventually do reverse splits, which is what happens is they split the float in half. The price increases by 1/2 or whatever that reverse split is. And then it has a small float again for them to, put some PR out, the price gets jacked up, and then they issue a offering. And then they dilute the price, aka an offering is just selling more shares to the public, creating a bigger supply. If demand stays constant, supply gets bigger, price decreases. So understanding kind of the economics of how these things work is super important. Liquidity and volume, super important as well when we talk about low floats. Like I said, when we get momentum that dies down in these names, you start to see sell-offs. Tell a low float? Yes. Actually, I don't know. Let's look. There's a couple places, by the way, guys, you can go to check the float. Finviz is one of them. Great little website. Shares afloat? No. This thing is not a low float. But anyways, so you can use Finviz. You can use Trade Ideas. They have a little thing there. Some brokers have one that tells you the float. I think most do now, but anyways. So liquidity and volume super important. When we start to see volume die down, liquidity die down, what you typically see on these stocks is you see the spread starting to tighten up. Start to loosen up. And you'll start to see selling volume come into play. We were playing TEL today on the upside, and I said, okay, TEL if it breaks 1014, it's got room towards this level. 1240 on the upside. We were long it. I started to see that it was extended to the upside. What actually happened was, and we'll talk about this on the short side a little bit later, is this candle opened up with a 4 EMA extension gap, and I went, okay, I sold my entire long position, and I got locates, and then I grabbed it short. I actually got locates before it started to run because I figured it was going to run. And I took it short, and then basically I didn't realize it did this into the end of the day. Wow, missed that. But anyways, I took it short. I covered most of it into the 13, and I scalped it one more time, I think into the 50. I'll show you guys the actual play. And then I didn't see this last 5-minute pull, but gosh, darn it. That would have been nice to be in. Getting locates, I'll show you. I'll actually show you Wade how it works. This is what hard to borrow stocks. You have to pay for locates on these small caps. You don't have a margin account, so you haven't done it yet. Yeah, if you don't have a margin account, you can't even short. So no worries, though. There's plenty of money to be made on the front side, but I like to play both, just because you have the power to do so. So anyways, liquidity and volume, guys. Liquidity and volume to the buy side. Started to dry up here. You could see it in the L2. You could see it on the actual volume bar. Whoops. And then what happened was, obviously, it started to pull back after it broke the parabolic trend and then into supports. So you can take advantage of these things. These are some other low floats: SIN, IGC, MBEC, Tilray. From today, the ones that we talked about, Mist was one of them. IMRN this week was one of them. I should have talked about that, UONE. There's a whole bunch of different low floats that we typically see move at least, there's I would say there's a group of like 3 or 4. You get at least 3 or 4 a day that pop. You usually get one with the most momentum, and then you get other ones with not as great, but ENT, that was another one. You get ones with not as great momentum, but still money to be made both on the long and short side. So, what were some other ones this week? Oh, ABUS, not low float, but did run. NWGI, I think this was a decent one. Yeah. Really thin, but definitely low float. USAG. It's earlier on in the week. This one was more in the pre-market. This was that oil and gas play. SND. I remember shorting this one. OBLH, whatever, doesn't matter. I'm just saying this so that if you're watching the recording, you can go back and check these names out. And by the way, July 24th is the week, the end of the week. So beginning of the week, July 20th, and you can go back and check out these charts. So low floats, understanding actually what they are, how they work, super important because it comes into play when we start to look at technicals, etc. Anyone got any questions in regards to that before we move on? I think it's pretty straightforward, but if someone has any sort of gray areas, I want to clear it up now before we move on from it. You guys go ahead and ask. I think everyone's good. Cool. All right, so the best way to play low floats is by setting alerts. I usually have a list of, I don't know, I think I have 3 lists or 4 lists now of 150 a list. And what I do is, I think actually no, 100 a list. I can't remember what Quest lists are max of. But what I do is I go through a whole bunch of low floats and I throw them into watch lists. And then what I do is I go through charts on them and I actually set alerts at breakout points. And the reason why you want to do this is most scanners will get you into that low float stock a little bit late. So by the time you pull it up, it's already ran up, like 50 cents to $1. Scanners are great. Don't get me wrong, but I want to be the first guy in there because I want to get in there with some size out the gate and then be able to get really big on the stock if it starts to work. Because if you can get in front of momentum like something like that, OBLN or whatever, or not OBLN, but that mist, whatever. If you can anticipate this type of a move, get in front of it when it breaks out, you're going to have a fantastic average. Your risk reward is going to be great, and you have potential to make 5 to 1, 6 to 1, 7 to 1 risk reward, right? That's the whole point. So that's the key. Now we'll talk about building these lists. I'll show you actually how I do it because it's not very complicated, but definitely important to understand how that works. There's some money to be made just by putting together those lists, getting alerted when they actually break out pretty easily. Let's pop this back up. So, key thing, we want to set the alerts at the range breakout areas. I'll show you exactly that in a second here. We want to make sure that we have a pretty substantial list of the microcaps that we can go through. Former runners. What I like to do is, and I always tweet this out, and the reason why I started tweeting it out, these are the low floats that I've been running today, these are the ones that ran from yesterday. The reason why I always talk about that and tweet it out is because, and I'll show you the list, there's opportunity usually going forward the next day, either on the short or long side. So it's a really good idea to keep a rotating watch list of these low float stocks. Maybe keep them in there for 3 or 4 days and then cycle them out if they're dead. So this list that I produce every single day is what I'm doing is I'm just looking at the biggest percentage movers of these low float stocks, and then I'm just tracking them the next couple days. So you can watch them on the long side or the short side, whatever you want to do on them. But it's important to just, even if it's just 4 a day, you set some alerts on them and then you move on. You'll make some money just doing that little bit of preparation. So former runners, really good list to have put together. If you see any low float stocks that are, if you buy a low float therefore on the, I can try to read this question. If you buy a low float therefore own the shares, can you automatically switch to a short without having to locate the shares? No. Still got to pay for locates. So, anyways, moving forward. 52-week range, greater than $3. This is just talking about breakouts above a 52-week range. So when you get a stock, a low float stock that's curling up and it's above a 52-week high and it's above $3, you tend to see continuation on those stocks and they tend to pick up momentum. So we'll look at some of those examples in a little bit. Sympathy plays, note the sector and float, always sympathy plays. They go less, but nonetheless they still can go. So what happens is we look at a stock like MIST. We didn't really have any sympathy plays, but a good one would be, a good example would be looking at like something like Riot today. So these Bitcoin plays started to push up, right? Riot, Bitcoin play, blockchain play, I guess. What's another one? Mara. So these names that are related to each other tend to all move together. If this thing went up like $1 or $2, this thing would probably move up 50 cents to 60 cents, something like that. So knowing what the actual ticker is, what they do, and then looking at their peers, you can get into some decent opportunities on those sides. Best way to do this, I find, is by literally going to FinViz and just looking up what the stock does, and then going to this lowfloat.com thing. And this is a good way to build lists as well, guys. Lowfloat.com. It literally has, and they update it pretty recently, but it starts at the lowest float, like super small, and then it gets updated, or then it gets bigger and bigger and bigger. But you can see the actual industries that they're in as well. So if you know what the industry or the stock that you're looking at is, look it up on FinViz. It literally will tell you biotechnology, right? Then you can look at other biotechnology companies. They got to be probably related. Bio is a little bit hard because you're usually specific bio to some sort of treatment of something. Like this one, treatment of cardiovascular indications of developing. I can't read this, but I don't even know what it is. But usually biotechs are very specific. So if you can find another low flow company that's specific like that one, then you can find something that can move and probably will move on sympathy. So again, you can go to a site like this, low float stocks or lowfloat.com, and literally put together low float lists really easily. Awesome little tool to use. And then when you get the sympathy plays running, or when you get one play running, you know what industry it is, you can start looking for sympathy plays on this as well. Now, the best thing you can do is, like I say, guys, is have these alerts set. So doing a little bit, even if it's 10 minutes a day, doing 10 minutes of just charting these small stocks out, and then, you know, building those watch lists. Over the course of time, that 10 minutes is going to add up to a huge list being built, tons of alerts being set. The cool thing about these low float stocks is they don't really trade in huge ranges. So if you set an alert on something, it's probably going to be good for like 6 months. When you set a breakout alert on this MIST, it didn't break out, and I use this range right here. It didn't break out of this range after it ran the first time for like another, 2 months? So all these alerts are going to build up because they don't trade in a huge range. But once that PR comes out and momentum comes into the stock, you're going to know it. You're going to see it first. Do you trade stocks that are under $1 Spartan? Yeah, sometimes. Rarely though. Just because they don't have the amount of range I want to trade. Like you could take 100,000 shares or whatever, but I don't know. Making 10 cents or 5 cents on that versus making bucks on, you know, another stock. I just prefer points to pennies. It's just how I'm wired. But, you know, by all means. And most penny stocks are pumping, well, almost all of them are pump and dumps. And most penny stocks I find do not have momentum to last. Almost every time do they sell off. That's why I don't like them either. They rarely have follow through, which sucks. So it's either you're pumping the stock and you're in there before everyone else is and you're front running it, or you're one of the guys that's just trying to scalp it for pennies and you're probably not going to make a lot of money. So, idea generation. like we talked about, what has been running, why has it been running? So this is how I think, right? What's been running, why has it been running? Biotech, anything COVID related, typically biotech. What's the float size? If you guys haven't noticed, the float size of these stocks has usually being between like 3 and 1 million or lower. That's the float, usually tiny. You rarely get the ones that are bigger. ABUS is a exception, but most of the time they're, or most of the time now, lately, that's what they've been. Short interest, sometimes we'll see the case where they start going after low float stocks with higher short interest. That's just what's hot. And if that's what's hot, you got to notice it. So take note of what that short interest is. Whenever I bring up a low float stock, I look at the float, I look at what industry it is in, I look at how much money it loses a year. I look at, like I said, this the size of the float. Sorry, something's in my throat. I look at the size of the float, and then I look at the short interest. Important things to understand. General makeup of company, that can be important. Not so much. But once you consider all these things, you can start to build a watch list or look for other companies similar to those ones, because those are the ones that are most likely to start running. They're the ones most likely to issue a PR related to what's hot. In all my years of trading, guys, you always get things that are hot. Think about it, what do we have that was hot this year? I can think of two things recently, right? Obviously COVID vaccine related, huge, right? Anything COVID treatment related, huge. Electric vehicles, EV, huge. So there's three things there. Two are related. Electric vehicles not, but three sectors, or three different things that are being hot that you can start to go after. Like, okay, a really good example of a sympathy play was this. When Workhorse was running and Neil was running, so Workhorse started to run, Neil was running, I loaded the boat on Solo. And I got everyone in the swing chat in Solo because I liked it. So Workhorse ran on June 3rd and started running from June 18th, right? Solo ran a little bit. We started to get in, midway through June before it broke out, and then it broke out after, and then obviously it followed Workhorse's lead all the way up. So by knowing what's been running and by knowing its peers, you can get yourself into an opportunity like this. It was $2 stock, went up to $6, up 200% on a small cap company, low float company, just because you did a little bit of due diligence. Now I didn't know which one was going to run, right? This was really the only other one. There was Workhorse, Shell, there's Solo, all these other companies. You set alerts on them, it gets triggered, you take it. Graph. Is it Graph or is it SPAR? I don't know. I don't know what Graph is. How do you find and interpret the burn rate of the low floats to see their yearly loss? So what you do is you just go to FinViz, like I said, right? So you go to FinViz and you just look at the company. So let's look at Solo, for instance. Solo burn rate. Let's take a look. They lose $8.9 million a year. Well, how much cash do they have? 0.08 times the shares outstanding. They have $2.96 million. So they got what? For a third of the year they got money. So are they gonna have to raise money at some point in the near future? Yeah. EVs are a little bit different because it's a green technology. They're probably going to get some sort of money from the government, so you can look for those PRs. But this type of company will definitely need a raise at some point, right? So interpreting the burn rate, simply just go to something like FinViz and you just look at the yearly statement. How much money? What's the net for the year? Is it a loss? Is it a gain? It's going to be a loss most likely. And then you can just look at what they have on cash, and then you can really just think about, okay, if they got this much cash, this is what they burn a year, how long can they last until they have to raise? But do a little bit of critical thinking as well. What's the industry? Will the government give them money for this industry? The interesting thing is we got two industries right now. EV and we got COVID related, government's giving money for both. Right? So something to know. How do short interest play a role with these low float stocks? Okay, Mickey, supply and demand, right? Low amount of supply. So, I want to try and find one first, actually. Let's just go through an example. Okay, I'll just go under $20 float. Let's go under 10. Where's short interest? I don't think there's going to be many. Am I blind? Where the heck is it? Float short, there you go. I want to try and find one that shows short interest. Okay. There you go. So, here we are. Low flow companies, higher short interest. Short interest, that means that there's people short the stock. Don't know where they're short. They could be short higher or lower. But there's shares that are already taken that are short. So what happens is, if the stock starts to see a lot of demand come in, the supply is already going to be smaller because you got people that are short. The higher the short interest, the smaller that supply that is going to be available to the public to be traded is going to be, because there's still a whole bunch of shares held short. If the stock starts to run, then what's going to happen is these shorts are going to start to lose money as the price goes higher than where they're holding it from. What are they going to want to do? They're going to want to cover that position. When they cover the position, they're going to have to cover on the ask to exchange the shares back, which is going to push the price up even more. And those short shares are going to be taken into a long. So when you got a stock with a high short interest, basically what can happen is it causes these guys to start covering, which causes, they have to buy their shares back, they have to buy the short back, which gives even more momentum and demand to the buy side of that stock, which can cause it to push higher. These guys will be forced to cover their position, most likely at some point, right? So that's why you can get short squeezes. That's what they call it, a short squeeze, because you got not only have buyers on one side, but now you got the short guys getting out of the stock as well, adding to that momentum. So when you have a low float stock, a stock that already moves highly on demand, that can just increase the demand that much more. What percentage is considered high? Over 20% is when I start going, that's going to have an effect on the stock, Thomas. The higher and higher you go, obviously, the more effect it should have. We got a couple names here, like 53.86% short on this EXO. Like, that's pretty high. Let's see. There's now 48% on MFH. The question is, where are these guys short? Like, if you look at something like, for instance, this Rev, okay, they got a 50% short float, which is high, but the stock is down from, 24 or 25 bucks, whatever it is. So these guys may all be short here, which means we may not get a really big push to the upside until it breaks at 15, and then you probably will get a push into the 25 area. So just something to understand from that standpoint. Really good question though, and I'm happy that we went over it, because not something we usually talk about, but it's super important. Now, we're not seeing a ton of these low flow companies with high short interest run, but I've seen it usually once a year. It will be hot and they will go. Is there ever a correlation between high short interest and continued trend downwards? Yeah. Shorts put downwards pressure on a stock. KY or KW. So if that's the case, usually the higher the short interest, that stock's probably come from some point much higher to the downside. The short interest isn't going to be high for no reason. It's going to be high because people have been shorting the heck out of it for a while. Like this EXO, I'm not sure why the short interest is so high. I'm not sure if it's accurate either because it did a reverse split. But because it did do a reverse split, this stock was probably, I don't know how big that split was, but my guess is this thing was a penny stock before, this EXO. So you could probably, add like $40 or $50 to where these guys are probably at equivalent. So scanning intraday and outside of market hours, what should we look for from a technical standpoint? What I want to see primarily is range breaks on the daily. So let's just go through a whole bunch of low floats actually. So let's just do what I would do. So I would go through a bunch. Let's go to the screener. Oops, what am I doing? The screener. FinViz. Oops. Let's just do it easy here. Under 5 million. Let's go smaller. Price under $5. Actually, whoops. There we go. So a really fast way of doing it, I usually like to see some volume on it too. So this is kind of like generally what I will scan for. Off. Yeah, that's good. And here's my screener, guys. You can have it. So typically what I'll do is I'll go through these companies and I'll set alerts on them. So, ADTX, maybe there's something there. I don't know. AEY. What I'm going to do is this. I'm going to move this over here. So then we can do it on this chart because it looks a lot prettier. Let's get rid of that for now. So I'll just go through these tickers, right? Whoops, ADTX. And what I'll do really quickly, like ADTX, okay, where is the breakout area here? Obviously breakout area here is going to be this range break to the upside. 446. If it gets above this level, I want to know about it because it's going to have room pretty much towards 708 to the upside. So this could have some potential to move for us on the upside here. Nice chart. AEY, anything there that I like? Not really. I mean, if it breaks the 50 EMA to the upside, you could get some continuation to these peaks. 284, then into the 310 area, 308. But overall, because the risk reward isn't that skewed to the upside, not something I would put on my list. Acre. Next one, a little bit of a flag former runner. Probably would need to break this area right here, 556. Then we're looking at 639. Not bad risk reward by any means. This one probably worth setting an alert on. But don't love it. But I would set one on it. Let's go back more. AMRH. So this is not a bad one. Former runner typically sells off after its runs. 204, 216, 248. Not enough range, so don't love it. I like to look at the chart, but I don't like the range on it. AMS. Nah. So what I'm trying to do, guys, is I'm trying to find range breakouts. So what's a range breakout actually? A range breakout obviously is the break of a peak with room from a risk reward perspective to the next peak. So in this case, yes, this is a head and shoulders, but it is a range break as well to the upside. It broke 346, you got room towards 552. I like this, any. I think that's a great looking setup. But this name, note that it always sells off. One thing you also understand too, guys, is as you go through these charts, you'll go, oh, I remember this name, oh, I remember this name, oh, I remember this name. This one always sells off, this one always does this one usually gets a continuation. This one maybe, starts making sympathy plays or typically has sympathy plays that run with it, yada yada. You'll just start remembering this stuff. Bimmy, you know, that thing's a piece of garbage. Obviously, they did an offering, they're diluting the stock. Blinn, nothing really there. Craig, nothing there. CTIB. I mean, there could be something here on CTIB, I guess. Break at 293. It typically gets a nice amount of volume. I'd set that alert. 293 breaks from towards 337, and then usually spikes bigger through the first couple resistance levels. So you guys kind of get the the idea. I go through my list that you guys now have the scanner for, and then I literally just look at alert or try to set alerts on range breaks with room to the upside. You want to find cut and dry. This thing has room. It's going to be worth my time to trade. Because if it's not, then no point in putting it on the list. Will you catch all the low floats that have PRs that come out? No, but are you going to catch most of them? Yeah, probably. I like this IPDM. This is a good one. So when you get a name like this, guys, that's really tight and there's not a lot of data here, it's usually a reverse split. This one for sure is a reverse split name. Spartan, do you feel like you get too many alerts at once by setting so many? Nope. You look at the chart. You know the alert gets triggered. You just click it, chart pops up, and you just look, and you go, do I like it or do I not like it? That's it. Do between all the low float and the normal big cap stuff? No, because I mean, you know me. I'm getting alerts triggered nonstop all day. This is how I find how I find the momentum so quickly. Because I'm doing this stuff, and I'm also going through watch lists. I'm just looking for opportunities. If you find that you're overwhelmed, then maybe set less. But it's definitely worth it to have them set, because if you want to catch these things first and have that better risk reward, then you're going to have to definitely have these alerts set. Mick, this is a nice trade. Nice chart, breakout, reverse split name. I like it. It's got room to the upside, boss. And if you watched last week's webinar, then you can understand, oh, where does this thing have room to? Oh, yeah, that's right. I got to do a short-term fib. There you go. Done. So, setting these alerts, super easy to do. You guys know what I'm looking for. Range breaks to the upside with room. If you can get these things that are reverse splits, like this, this name right here where it broke out and had room to all-time highs. I love that type of a setup. I think it's fantastic. It's probably the best setup. That you can look for. I'm just going to pop this up here. So I'm going to show you guys this in a second. There you go. So anyways, oops. So range breaks on the daily, typically what I'm looking for. Weekly runners, range breaks of previous short-term highs. So what we'll do is we get these recent range runners, something like this mist, guys. The only reason I was looking at mist today was because it was a recent range runner. So this thing recently, obviously, was breaking out to the upside, which was yesterday, honestly. And because I knew that this thing was breaking out to the upside, my alert triggered, because I set an alert literally at that recent range high. And I knew that if that level broke, it had room all the way basically up towards, 1450. I did a fib extension to get a closer level to it, to where it was, but you get the gist of it. You get a recent range runner, or recent runner, that has more range to the upside, you tend to get continuation on these names. Spartan, do you recommend low floats for beginners, for beginner day traders? Somehow I have always tried to avoid them. What do you think? I think it's okay. The reason why most beginners have issues with low float stocks is they have no idea how to control risk. So what happens is they end up chasing these things and then bag holding them every time. Chase, bag hold, chase, bag hold, chase, bag hold, and they get destroyed because of that. You can't bag hold these names because they're garbage companies. What do you think? I've always charged. What do you think? For the loss, for the stop loss on those, do you still wait for candle close? Yeah. Still wait for candle close on the stop loss. Oh no, for low floats, no, Leonidas. Sorry, my mistake. I was looking at something else. But for low floats, you don't wait for candles to close. So for breakouts, you don't wait for candles to close. For stop outs, you don't wait for candles to close. When they break the trend, you don't wait for candles to close. You immediately execute your trade in or out. Don't wait for it. Because the float is so small, it just takes a little bit of volume for it to move a big amount. And that's important to understand. Because if you are, obviously, long a stock and it starts to break down and you're waiting for that candle to close, how long could that take? For instance, if you're looking for this candle to close, 968, you had 4,000 shares, and then it pulled down towards so the next candle opens up at 940. I mean, you're losing $800 because you waited 10 minutes. And God forbid, you're at the 50 MA waiting for the candle to close here, and it goes down another point. So, don't wait for candles to close, just wait for it to break the price. One thing you've got to be doing, though, is not just watching the candles, you also need to be watching the L2 to see if there's enough volume to push it through that level, because you're also going to see buyers at that support as well. Do you treat midday breakouts like trading the open, where you are watching the L2 and adding into... Whenever I'm trading a low float KW, you could say it's like trading the open, because it's going to have that momentum. So I'm adding into it, within 15 to 30 seconds. I'm watching the L2 for sure, because the volume, only a little bit of volume can move that stock a lot. So you have to understand and be watching that volume to see where it could potentially push the stock too, right? Have you tried the 3-minute strategy in those like you do in options? I mean, you could, and it could work, but it's more so due to volume. It's not necessarily due to candles crossing. The 3-minute is a good rule for options because we're using it on big cap stocks. And big cap stocks tend to trend for longer periods of time. Low float stocks do a ton of fake outs. Like look, fake out, fake out, fake out, fake out, right? None of these were real moves because there was no volume behind them. Once there was volume behind it, the move was obviously real. And you don't see the volume unless you're looking for it. What typically triggers a pop midday? News or other factors? Typically news, it could be some sort of, chat room that's pumping a stock. That happens a lot. It could be a lot of different things, but usually it's going to be PR related or it's going to be some chat room that's going, hey, I like this long, or some guy with a lot of followers and everyone's just following him into it. So, definitely something to keep in the back of your head. If it's midday, if there's no news behind it, it's a pump. I'll give you a really good example. And I shorted this stock at the end of the day. And I didn't get a lot on it. I made $1 grand on it, but whatever. This wiki. Oh, I can actually show it to you. I'll just make this smaller. How cool is that? Oh, let me pop this out. It was wiki. I actually went long and I took it off, and then I went and took it short. So this stock was clearly a pump at the end of the day. There was nothing behind it. I looked for the news, couldn't see anything. Someone was just trying to make some money at the end of the day. I shorted it in the after hours, got locate, shorted in the after hours, and then it came back, came down. So, yeah, KW. But yeah, understanding that's a really good question, because I always do consider that when I'm looking at a midday pop. Is it a real news pop? Is it someone just alerting it, probably, and pumping it? And if that's the case, is there enough volume for that thing to continue? And if there isn't, we can take it short. Right? So, going back to where we were on this. Weekly runners, we want to keep an eye on that. Oh, EMA crosses, when we scan for these low float companies, a 200 SMA or 200 SMA cross, 50 EMA cross, or 13 EMA cross, look for these things on the daily chart. Typically when you see these levels get crossed to the upside, they have to be a cleaner cross than this stuff. But typically you get follow through. 50 EMA cross to the upside, you got some follow through today, this day. Let's look at some other examples. GNC is a fantastic example. 50 EMA cross to the upside and 13 EMA cross, and you start to get a ton of volume coming into it. So when you look at these low float stocks, you can consider these EMA crosses because they do have the potential to push things a decent amount. And they can get further continuation for multiple days. If you're a swing trader of low float stocks, that's the main thing I'd be looking for. Don't play the range breaks because that's more day trade stuff. Play the EMA crosses. 200 SMA, 50 EMA, 13 EMA cross to the upside on the daily chart. Really good thing to scan for. Recent reverse splits. Obviously, company that just had a reverse split has a way smaller float. They can push these things pretty quickly. So what happens is if you get a stock that has a recent reverse split, I bet you'll tend to see them issue PR within a month, I'm thinking. So, reversesplit.com, I think it's called. Stock split history, that's what it's called. So a website like Stock Split History will tell you, the recent reverse splits that have happened and the ones that are coming up. And you can keep these on radar if you want. I check this like maybe once every couple weeks. And then, I'll look at the charts and I think if there's something there, great, whatever. But this is a good thing to be looking at because sometimes these guys will issue PRs in the near future, and you can typically see like consolidation on the chart where it's being bought up, bought up, and then they issue something and it tends to run. I'll tell you guys sometimes this thing has the look, It's because that's what I'm looking at. I'm looking at, okay, someone's obviously been adding into this position for quite some time. Flag hourly, daily, and intraday. So the last thing I'll scan for, guys, inside market hours is flag breaks. And that's really the only thing I want to play once a stock starts to run. So once a stock starts to run on these low floats, I really only want to play these. So I'll be in it long, but selling into the push, and then I'll add into this flag break. And as it pushes up, be selling into it again. You can you can take these range breaks intraday as well, like right here. At this 446 level, sure, that's fine, but the risk reward is way better from the flag. The one key thing you have to wait for is don't anticipate the flag break. Make sure the price actually goes through it. Don't go, okay, I think it's going to flag here, and then you take it long, and then it gets rejected, pulls all the way back down here. Wait for it to occur, and then go into it. Just wait for the price to cross through the level. Don't have to wait for it to close. The price just needs to go through that level and hold it, I would say, for, let's call it 1 minute. At least. You don't want it just to go through it for 1 second and pull back. You want to give it a couple seconds. Or at least 30 seconds to a minute. What you want to do is you just want to watch to see if volume starts coming into it. If volume starts coming into it, then yeah, great, take it long. Like I said, these moves are always based off of volume. Make sure to be paying attention to what that volume is doing. So, alert triggered, now what? What do I do? So if alert gets triggered, you pull up the chart. First thing that you do, chart gets pulled up. Next thing you do, when they pull up the chart, is you check how much room it has. What's the risk reward? So let's say I'm looking at this GNCA today. It breaks out of last day's high, whatever, my alert here. Where's the next resistance to the upside? Next peak that stands out to me is going to be up here at 419. That level breaks and you're into like the 548s. Do I really like it on the breakout here? You know, it's got 50 cents a room. It's okay for a small stock company, small cap. That could fit your risk reward. 50 cents a room, maybe you're risking 15 to make it. Sure. You take the stock long on that breakout, which happened, where was it? For 376. So basically right here, broke out of that level, you take it long, you risk your 15 cents or 20 cents, whatever it is on your starter size. As it starts to work, you add into the position, your first target's there, you hit it, you sell some, breaks through that level, and then it's got room towards 548, and you go, wow, I'm going to add more into that stock, and then you do, and you get further continuation higher. Where do we add on low float stocks? We add in on flag breaks. We can add in at that 8 EMA touch as well. 2 areas to add, primarily. Or add after 30 seconds of it working. So, check the peaks and the valleys, the risk reward, check the volume. Is there volume coming in behind that breakout? So literally just looking at that volume bar. Is there volume coming in at the breakout? Yeah, absolutely. A little bit of a spike of volume. A good case in point would be actually missed today. I think it's such a good example. Volume coming in after the breakout? Yep. Tons of volume. Next thing to look at, L2. So you want to bring up the L2 and look at what the L2 is actually saying. So let's just look at what an L2 looks like. And get rid of this. So you can use your L2 on whatever system you have, but usually L2s have a buy and ask or a buy and sell connected to it. And the reason is you want to be watching the L2 and be looking to buy and sell off of that level. So for instance, missed, you can see the L2 here. Bid ask. What do we want to see? I did a video 3 or 4 weeks ago talking about the L2. And basically what you want to see is if the stock's bullish, you want to see the bid chase the ask. So you want to see the ask increase and the bid price increase behind it. So it's chasing the ask to the upside. Usually the bid and ask will be very tight. As the volume dies down, you'll see a larger spread come between the two things, the bid and the ask. And if it starts to sell off, then you'll start to see the bid or the ask chasing the bid to the downside. Bid dropping, ask dropping behind it. That's the best way I can explain how to watch the L2, as simple as it can. You need to have a time in sales beside the L2 as well, because you don't know if what you're seeing on the L2 going through is actually real or not, unless you're looking at the time in sales, because then you can actually see the orders being executed. How do you determine if a stock is about to halt based off the L2? The price will get pinned in one area, salish. So what happens is it probably will happen for about 10 seconds. The stock, so there was one stock that halted today, that WKEY, whatever, before they closed. The bid and ask both got pinned at 860 for 10 seconds, and I went, it's going to halt, based off of that pin action. That's them putting the circuit breaker on that stock. MNTB, it crosses the daily 200 intraday loss and good low floater. Let's take a look at it real quick. MTNB. Yeah, looks good, boss. Not a ton of room, but it's a nice looking chart, that's for sure. Yeah, not bad. Oops. So watch the L2, check the volume. You make a decision within 5 to 10 seconds if you're going to take that trade. So you got to make a decision pretty quickly when you bring up something that's been alerted or you've scanned it and you like it. Look at it. You're either going to take it or you're not. Do not hesitate. You hesitate, bad risk reward. It gets a lot worse. You're going to be chasing the stock. Sometimes it takes only 30 seconds for it to go up 2 or 3 points. It can move really quick, like missed it. That, that took like 30 minutes, but the first initial move was like a 40-cent move in a couple of seconds. I'd say 10 seconds, whatever. So, take the position. Understand they won't always go. Starters minimize chop. Risk reward is the name of the game. Whenever I see a low float stock, get alerted. I never go full size, guys. And I want to go big on these things because I want to make a nice amount of money if they work. Start small. Start with 1/8 size on a low float stock. If you usually play 1,000 shares, start with 200 or less. No, you can start with 100 actually. I guess 150, whatever. Start with 150 shares. Starts to work. Add into the position. If you usually play with 1,000 shares, and let's say your risk is 30 cents to make 90 cents, you want to make $900, and you're risking $300 to do it. If you start with 150 shares, your max risk at $300 is down 2 points from where you're entering. So you can give it a lot of room to work, etc. And if it doesn't work and you get out for a 50-cent loss, you're only losing $75. Not a big deal. You can make that back on one trade full size. Moving literally 7 cents or 8 cents. So it won't take a lot for you to make it back. Scale into your positions on low floats. Do not go full size out the gate. I cannot stress that enough. Especially if you're chasing something, guys. If you're chasing a stock and it feels like a chase and it's already running, you've checked the risk reward, but you just want to scalp it, you got to be small. Because if you go in there, let's say you usually play 5,000 shares and you're wrong and it drops 2 points, you just lost 10 grand in the blink of an eye. Be smart. Scale in. Protect yourself. So, position taken. What do we do? Scaling in. What do we look for? Increasing in volume. We look for more room. We look for flag breaks to scale into. If you're right for 30 seconds, scale into it on the volume increasing. Range breaks that are happening and confirmed. You anticipate on the scale in, guys, you lose. It has to be quick. Scaling out. Where do we scale out on low float stocks? You scale out into resistance levels, first and foremost. So we scale out into some resistance levels. We're selling some into 950. We're selling some into that 10-14 breakout, and then obviously as the volume died down, we sold more. Where the heck did it go? There it is. Volume slowdowns, L2 large sell orders. So sometimes you see a lot of selling going in on the L2, just big order after big order after big order going through, and the price isn't really moving. It sells. They're going through. You're going to see it on this time it sales as well. You want to sell into trend resistance. So if it's a daily trend resistance, you probably want to get out. And you also want to sell into parabolic trend breaks. Parabolic trend breaks, get out of the position. So let's go see if I can just pop this up. Oh, good. I thought my account was showing. It's not. Anyways. So, what do we got? Missed here. Alrighty. Let's just look at this. Let's go to the chart. Oops. There we go. Well, you know what? I might be able to do this, which will help. Configure chart area. Show the trades on the chart. Triangle size. Let's go 3. Okay. Cool. Yeah, okay, sweet. Okay, so basically you can see all my buys and sells and whatever. So stock broke out. started to run up. As it was running up, and let's put this beside the 10-minute chart too. I think that works better. You can see it better on this chart anyways. Started to run up. I was selling some into the first resistance level, like 36, 37, which you can see here. So bought some, sold some into that level. As it broke that level, I added into the position immediately on the breakout. Started to scale more into the started to scale up more into the 960 area. It pulled back a bit on the just the price on the L2, which I ended up buying more. Selling some more into this little push towards the breakout last day, which is the 1013 area, which you can see right here. Sold some at 982, I guess. Whatever. I had about, I think it was like a 1/4 size left at that point, or 1/2 size. I saw volume coming in on the L2 as it held above this level, so I figured, okay, we got room towards the 1244. So I added into the position. I pulled up my average, sure. My stop was at my entries at that point. As a push stop, I was selling to that push pretty much my entire position. Sold, 1070, 1070, 1060, 1060, 11, 10, 11, 12, 11, 15. I was all out. I was all out, like I said, because this candle opened up and was extended to the upside at 11.18. So I ended up getting out the entire position, then I ended up going short. So because I saw the volume died down, I saw the extension, I figured, okay, I'll take the stock short. So I took my starter position and then I added into it immediately. So I went full size immediately because I saw that it was pulling back, confirming. Figured, okay, we're going to hit this level first. Or sorry, pull into the 1080s and then probably go into the 4 EMA. So as it was pulling, I was just covering it. Covering it. I added a little bit on that 4 EMA break, which you can see at 1027. I covered some more into the 8 EMA. And then I shorted some more actually on the break of the 8 EMA, which didn't end up working, so I ended up covering the rest of that position here entirely, basically at like 10 bucks. And then what happened was it started to break that 8 EMA again. I started shorting at 960, and we got a little bit of a quick yank, and then I just basically covered the entire position into the 13. Figured it was going to bounce, and it did. And then I looked away, and I missed this little move at the end of the day, which I wish I was in it, but you know, it is what it is. So, you know, pretty decent little play on both the long and the short side. You can see the fills here. You can see what's going on actually on the chart. But I'm trading, you know, based off of the EMA supports. I'm trading based off of what I'm seeing on the L2. And then I'm, you know, exiting and entering the position, you know, primarily because of the volume. It's not really, I would say, you know, it'd be like, it's like a 50-50 to do with the chart and 50 to do with the volume. Both things are super important in this regard when we're dealing with low float stocks. So here's a good example from today. You know, obviously, I don't know what it is altogether, but probably like, I don't know, 2 or 3 points. Pretty decent trade. Obviously, you know, I missed the end of it, which sucks, but it is what it is. I'm not perfect. But a good little example from today on both the short and the long side, which kind of brings me into, you bought at 9:30 and you held at 10:30. So wait, you know, you just always gotta leave a piece on, right? That's it. You know, for me, I like to get aggressive on these low floats. If I see it breaking out, it has room to the next level, I'm adding back in. So I think it can get there. And what do you do if you have alerts going off in the middle of a hectic trading like that on missed? You focus on what you're doing. Doesn't matter if there's anything could be happening in the background. Someone could be making $1 million on, you know, some Tesla calls. I don't care. If I'm trading something, I'm trading it in the minute. Once you start going, you know, you've all seen whatever that show is, squirrel, whatever, the dog. Once you start acting like that in trading, whatever you're focusing on is going to lose you money, I guarantee it, or you're not going to manage it correctly. Focus on what you're trading first, especially if it's a low float stock. You can't really do anything else at that point in time. Trade it and then move on. And if you miss a trade, you miss a trade. You're always going to miss something. Just be smart. Just use logic at this point. I mean, you have to be focused to make money. You have to be focused on what you're doing to be good at it. I'm only using a 10-minute chart. I never use anything lower than a 10-minute. Never a 1, never a 3, always a 10. What you guys see, what I'm using, you know, when I'm showing you my screen, is literally what I'm using. Do you think we should focus on getting in and out more frequently? Well, no, I don't think so, Wade. What you should focus on is scaling in and scaling out, because that's what I'm doing, and it works well. If you're getting in and then out, then in, then out, then in, then out, your risk reward becomes worse and worse and worse and worse, and at some point you're chasing it. But if you can leave a core piece on, you're always your average is just going to be moving up, but you're going to have a lot of cushion. The ready profits that you have on that stock are going to be your cushion. If it goes up more with your newly added shares, you're going to make more money, great. But if it pulls back, you still have that cushion. It's a lot easier to scale a stock with a core than it is to go in and out. The mist was a stock or options trading. Well, we're looking at low float stocks right now, boss. Like, you should be able to know what it was. Does Mist even have options? I don't think so. It's a low float. Most low floats don't have options. But yeah, so a good little example there. Risk reward importance, high volatility equals dangerous. What does that mean? It means understand what your risk is, understand your sizing. Biggest thing is sizing. Whenever I see a trader make mistakes on a low float stock, it's because they're too big. Too big, too much emotion, they just make mistakes. So make sure your size is appropriate. Market makers like to play games, they like to whip around the price. If your size is too big, it's going to make you get emotional, you're going to make mistakes. Anil, how do you choose between equity or options if the low float has a decent option? What do you guys think? How do you think I do it? What would I look at to make that decision? Delta, risk reward. Risk reward, yes. The delta and risk reward go hand in hand. Which one can potentially make me more money? You know, you guys have seen it where I go on SDC. Sometimes I'll take options, sometimes I'll take equity. That's the really only one I can think of. Like something like Tilray, where I can play the stock, but instead I like to play the options because the options have a usually pretty good delta. It just really depends. Mitt, love to play the options. Solo, love to play the stock. Depends. So you can blow up your account, long or short, no room, no trade. So if you guys are chasing something, you can get hurt. If you are shorting a stock with momentum, you'll get hurt. If you're not comfortable, reduce size. Big thing there, guys. You don't have to go into it with a massive amount of size. Let winners run, move stops up, trailing stops, 13 EMA rule. All right, so when a stock is working, a low float stock, the momentum rule for me is I don't really want to get out of that stock long until two things happen. Number one is you get a break of the parabolic trend, which is going to be the 4 EMA to the upside, and you're going to get a pullback to that 13 EMA. If this thing's been running all day, it's going to hold the 13 EMA and continue to run. A good example of this was IMRN. I believe it ran this week, or was it Friday last week? I don't know. So basically this stock, this is not really a great example, but what's one that had momentum this week? HTBX, that could be a good one. Yes, perfect. So this is a good example of you don't really want to get short the stock until it breaks the 13 EMA. Once it breaks the 13 EMA, the trend is broken on that low float. As long as the trend's intact, you want to stay long the stock. So HTBX, that's a good one. Did we get a high flyer at some point in the last couple weeks? We must have, right? I'm talking like one that went from like I don't know, $5 to like 20. I swear to God, there's one I can't think of it. No, these are all been just little pops and drops. There hasn't really been anything sustainable, I don't think. Wimmy maybe, actually. This could be a good one, Wimmy. Yes, that's fantastic. That's what I want. Actually, it's after hours. thought IMRN, but maybe I gotta go back. This one was after hours too, so most of these are moving the after hours. HTBX is a good enough example. Anyways, so as long as the stock is holding the 13 EMA, you don't want to exit your long position if it's been running from the morning to the middle of the day, afternoon, whatever. Typically, if you get that type of a run, you don't want to exit it until it breaks that 13 EMA. Because what happens is they tend to just continue to go higher and higher and higher until that level breaks. This one, same thing. It ran, and then it had pullbacks, and once it broke the 13 EMA, then it started to unwind. So if that's the case, you don't really want to go, you don't want to leave that stock, you don't want to get out of that stock on the long side until it breaks. Another thing you want to think about as well, though, is if you are going to be shorting a backside move, like if you want to just short the backside move, have no stress, don't short it until the 13 EMA breaks. Just wait. Wait till it breaks and then get into it short, and you typically will trade off to the 50 EMA, and if that level breaks, then you fully unwind. So, remember that 13 EMA rule, guys, it helps. If you're long the stock, literally goes along that 13 EMA. Once it runs and breaks, you take it off. If you're short, same thing to the downside. Do you add it? Do you add it through the day? Yes. How do you frame your scale out? We just talked about scaling out. How do I frame my scale out? Right there. Peaks, extensions, volume slowdowns, L2 large sell orders, sell into parabolic trend breaks, and into trend resistance. Scaling in, there's your information there as well. Are gap fills valid price targets for low floats? No. They'll just do whatever they're going to do. They'll go wherever they're going to go until volume dies down. So, intraday trading, things to ask yourself if you're going long. And this is really good stuff, guys. Are you chasing the stock? Always ask yourself that. I literally ask myself that every single time today. Am I chasing it? Where's the room? Where are the peaks? Where are the EMAs? Where are the valleys? So basically, what are the technicals and what's my risk reward? Wedges, flags, downtrend breaks. Do we see a setup? Some sort of setup? Only play confirmation of the break, aka price going through it. Smaller size, looser stops to start with. Add into the position, add into momentum. Importance of risk reward. Always has to be in check. If you're adding into your position, your stops need to move up. Importance of volume. If volume's dying down, you got to think about exiting the position. Importance of the L2, we already talked about that. 13 EMA rule. As long as it's holding, it's got upside momentum. 4 EMA, if it breaks that, you're probably going to pull back into the 13 EMA. No stops, you will eventually lose. Do not keep revisiting the same stock. Do not trade until you lose your gains. Once you hit a stock on the long side, guys, and it's good, you made your money, stop trading it on the low floats. Usually they're one and done trades. Unless it's holding the 13 EMA, it's not going to be able to continue to go up the entire day. Be disciplined if you're trading low floats. Big thing. Shorting takes patience. Extensions, momentum dead, aka 13 EMA broke down, volume slowed down. Those are the signals to get in short, like we talked about on miss there. 4 EMA broke, volume slowed down, momentum was dying. Okay, you can try to top tick it a little bit, risk to the high of the day. Don't try and scalp the top, and if you do, use tight stops. Hourly and 10-minute strategy. So this is a good backside strategy. Is you look for a 50 EMA break, 50 EMA break on the hourly. You look for a 13 EMA break on the, 50 EMA break on the 10-minute, and you look for a 13 EMA break on the downside on the hourly chart, and you tend to get continuation lower for multiple days. Good strategy to implement. Failed breakouts, failed flags, failed wedges, failed range breaks to the upside, all reasons to get into it short, double, triple top, quadruple tops. If you don't set stops on the short side, guys, do not short low float stocks. They'll destroy you. Absolutely destroy you. Wait, how do you judge low floats differently for overnight holds? Okay, so it's the same concept, but there's one other aspect we really need to consider. What do you think it is? And I've been saying it's the most important, it's 50-50, right? Volume, exactly. So you look at if the stock's trading is closing out near the highs, then yeah, I probably want to swing it, but it has to have volume behind it. If it has volume behind it, then yes, absolutely swing it. If not, then don't. Yeah, like, if you don't use stops, don't try to short. Want to be the guy who loses 100K because no discipline? I mean, there's a great trader that lost 300K this week or whatever it was on one trade, which, he makes a lot of money anyways, but still. Or not one trade, this was like 2 or 3 that just kind of went over. But control your risk, man. Control your risk a little bit better, you'll be fine. But, everyone has those mental days, I get it. But you don't want to be that guy. He can bounce back from it. Most people can't. Most people take that loss and they're done. Their account's blown up. They're screwed. Maybe they don't have enough money to cover what they lost. You don't want to be that guy. Risk reward always, guys. Always, always, always. Short side. I mean, that guy's obviously fine. I mean, he makes a ton of money. But anyways, short side. I want to talk about this. When we're shorting a low float stock, guys, half the time they don't have locates in the morning, or half the time they don't have locates in the day. How do you know what to take locates on before it moves? How do I anticipate that the stock is going to continue to move up the entire day? I do this every day, and I've been shorting these low float stocks every single day, and they've been paying pretty good. But the question is, at the beginning of the day, and you can use the strategy because you can play them long too. But at the beginning of the day, I need to get locates. I need to anticipate that stock's going to run because locates cost me money. They could be $200, $300, maybe $1,000 for the locates. So if I'm going to spend that money, I want to be able to make money on a stock that's going to run. How can I determine if it's going to run? Two things, guys. If you're seeing it in the pre-market, you saw this in the pre-market. How do I know to get locates on the stock? Alerts? Okay, sure. What else? I'll just tell you. You guys are hitting some things on the head. Two things in the morning that I want to see is I want to see a PR behind the stock. I want to see some sort of PR behind it. Some sort of news that they issued in the morning. That's the first step. Second step is I want to see volume behind that news. If I see volume behind the news and I see news that is causing that volume, then I'm going to get locates on that stock because it's probably going to run. And if that's probably going to run, guess what? You can take that stock long in the pre-market and make some money. Every single morning I'll do this. And I'll take locates and then I'll look to short these stocks. My rule of thumb is always, and I tell you guys this in the room, especially if you're watching us trade, I say in the morning, I always think that low float stocks, because 90% of the time they do this, you get a pop in the morning, and then there's some sort of topping that occurs, and then you take the stock short, which means you do not ever short in the pre-market. Don't start shorting in the pre-market, ever. Wait till the market opens up, and then gauge what it's doing. You primarily want to pop, and then to short into that pop. So volume and PR in the morning. So news in the morning, volume behind that news. Rule of thumb, don't short until you see topping after the open. Usually what I tend to see is there's not really a short in a low float stock until the last 2 hours or 3 hours of the day. These are rules of thumbs that saved my ass thousands of times. I learned the hard way. And when you're looking for topping, you're looking for double tops, trend breaks, all that good stuff that we talked about. So, what is a locate, by the way, guys? A locate, you have to locate the shares to borrow them. Hard to borrow stocks. You typically need like a specific broker to do it. Like I use Vision. Like I clear through Vision. I use Centerpoint, and this is what it looks like. So I'll bring up the stock like Wi-Fi or whatever. Something that hard to borrow would be like Mist. And then I'll put in how many shares I want to borrow, 5,000, 10,000, whatever. And then I'll hit inquire, and it's going to pop up the fee, what it costs. I'll either accept it or reject it. Now, some platforms will just have borrows on the stock, and it will tell you if you hold your mouse over that stock, it costs 0.02 cents to hold this, to borrow the stock overnight, or to be short over the night, etc. So, super important to consider. Now, once you know the price, you're asking a question I'm literally going to talk about. So, in order to see if it's worth the cost of borrowing it, you have to look at how much range the stock has. So, if the stock is breaking out on the daily and has a lot of room, you're going to have a lot of range, it's probably going to be worth it. If it doesn't have a lot of range, it's probably not going to be worth it. The price, the locates, if you guys remember at the end of the day today, I said I wanted to locate INNB, but the shares were 26 cents to borrow per share, which is extremely expensive. That's not worth it because I don't think it has the range for me to, to pay me the amount of money I would need to, to borrow the stock, right? So, just understand what the cost is, understand what the range is, and then you can pretty much figure out if it makes sense or not. More range, cheaper the cost, obviously the better it is. Yes, Thomas, exactly. So pretty standard on the short side there, guys. So, kind of wrapping it up here, guys, before the weekend, is, the key thing with the low float stocks is mainly preparation, and making sure that you understand what you're looking at from a technical and volume standpoint. So preparation is huge. Actually, the idea generation step, looking for unusual price action, volume, looking for those EMA crosses, looking at the trend, looking at the volume. Add in if volume comes. If this is if it's a spec play, you're holding for a couple days, and then you're exiting the position. We always have to have our risk determined though. Make sure you're scaling into these positions, and make sure you're just trading smart. Low float stocks are fantastic tools to trade. I love trading them on the long side. I love trading them on the short side. They're fun. They're a lot of fun to trade. You guys have traded them, I'm sure, at some point or another. Key thing is scaling in. Key thing is controlling the risk. And key thing is not overstaying your welcome. You don't need to be in those things forever to make your money for the day. It's great to hit it out of the park and have the conviction, but you can always leave a piece on and scale out as we go, right? Just like an options trade, pretty much. So that's what I want to talk about today because, I've primarily been shorting a ton of them and I've been going long a ton of them because you get so much follow through on these stocks, lately just because there's so many, retail traders coming out, etc. But yeah, that's pretty much what I want to talk about. Any questions in regards to what we talked about today, guys, before we shut it down? I think it's pretty straightforward stuff. Nope? Okay, I'm just going to close the recording down here.